Bitcoin, bullish breakout or bearish fake out? I don't know. We're going to see. We're going to take a deep dive into Bitcoin today on focusing on the daily charts. We're going to look at a lot of indicators, moving averages, all that good stuff. If you like the video, give us a thumbs up. If you want more than what you see here on YouTube, follow us on Telegram, 100% free down below. Check it out. Let's go ahead and get started. So massive big candle back February 4th, right? Going back there, that has not happened. 11.5% rally has not, we have not seen the likes of that in nearly 8 months. Way back June 9th, way back in 2021 was the last time we've had any candle. All of these candles you see in front of you were under 11%. Even the big ones, right? They're right there, almost not even over 10%, right? It's been almost 8 months since we've had that kind of move. And those can be the things that you look back on and, 3 to 6 months, and you should have, you're like, there was the sign, right? We hadn't had that happen in 9 months. Does that mean that this is confirming a, bullish breakout to the upside forever and there's no more going down? Of course not. But there's are signs, and we're going to look at more of the bigger signs in today's video. So that's step one, doing things you haven't done in a long time, and 8 months or so is pretty bigly. Okay, so let's put on a moving average or two and see what we got now. So let's do the 200 and the 50. Why those? Well, those are kind of the textbook bearish, death crosses and golden crosses. So what do we have? We had a death cross back on January 14th. Okay, now that is when you have your price action under your 200 day right there in the orange, and you have a death cross. That is a, kind of a textbook bearish bear market. And do they have to last forever? Of course not. Case in point, as of today, we are now out of that by technicalities. And if you have to pick one way to be right or wrong, technically is the best way to do it. So technically we are coming out of it right now. Does that mean we've confirmed it and bear market over? Of course not. We could go right back under. Now, let's go back and look at history and see what has happened when we've gotten each cross. Okay, so we got a bearish cross right here from the 50 crossing under the 200. Price action under your 200 day. Again, bearish cross, death cross, bear market right here. When do we come out of that? Well, you have to have your two check marks. You have to have your price action under your 200, which we got, and you have to have your death cross, which we got. That's two check marks. Now, right here, back in July 25th, you take away one check mark. So technically, it's definitely not as strong. You're not in a bull market. You're not in a bear market. You're in the limbo, right? So you've come out of it right there. Now, when did we hit the bull market? Well, based on those two things, it happened right here, right? Not here, right? You still don't have your price action on top of your 200. You kind of got it for a few days there, right? But you broke out here. You came back and confirmed and then lift off. So your price action above your 50-day and your 200-day, and you got your bullish golden cross right here. So this is kind of what we're looking for. When could that potentially happen? Your guess is as good as mine, but if you could, project this out, best case scenario, probably looking at maybe end of February. It's a possibility to get the golden cross and to have, a kind of a textbook check mark 1-2, just like we did back here. Back to a bull market could potentially happen maybe late February if we continue this super price action. I would say, maybe earliest, maybe first, second week of March, something like that. We'll keep on top of it. Daily updates. We'll look at it. Just wanted to, project this out and notice that even with the capitulation week here, we are up pretty good amounts. We haven't had this kind of rally since way back when we were bullish in October, right? So we're up 30% from the bottom so far. That's a pretty good move out of Bitcoin. In how many days? I didn't look. Did you? 14 days. So 2 weeks, 30% out of Bitcoin. I don't know if anybody saw that one coming. I certainly, hope for, I think we can all hope for that, but maybe unless you sold back in here thinking it was going to 20K. But in trading, nothing is 100%. So there's, no matter what your emotions playing off you, just assume the market is always trying to trick you, and just stick to your plan and continue with that. The market is always going to try to fake you out. Okay, that's how it works. So get used to it. Okay, now let's go look at a couple other things. Let's go look at some indicators. Let's see, make sure there's anything else. Let's actually go out to the weekly real quick before we go to indicators, and let's look at our support band here. So the bigger picture, the weekly scale. Now these are weekly candles. Yes, this is our 21-week EMA and our 20-week SMA. So this is our kind of what we want to look for to turn more macro bullish. So right now, just like back in July, right, we're rallying up to that. We're not even to it yet. We still have a little bit of ways to go to even get back to our 21-week. But that would be the big step one. So another 8% from here to even get to it. And not only do we have to get to it, we need to get above it and hold it as support. And to get super bullish, we would have to get above our 20-week SMA and then hold that as support, like we did kind of back in here, right? And when you do this, when you get the price action moving week over week, right, you'll get that cross of the 21-week EMA over the SMA. Why? Why does that happen? Well, the EMA moves faster because it weights the more current candles at a bigger weight than the 20-week SMA. Just is all the same. Okay, so that's why if you're new. Okay, so now let's go look back to the daily and put on some. Let's look at some actual indicators here. So let's zoom out here. Let's go look at our RSI for the daily. Right, way oversold here back in January 22nd. I mean, lowest we've been in quite some time. Right, look at the May drop. We went lower than the May drop. Let that sink in for you. On the daily RSI, oversold. Indicators exist for a reason. Right, you want to kind of trust these when they're doing things that you've only done 2 times before just a few days ago. We've only done it twice. The pandemic drop, look how low that got, right? Dramatically oversold. V-shaped recovery out of that one. But since then, May, right, when you're lower than historic lows, right, you probably should pay attention, and it's probably time to stop selling and start thinking about buying. This is when everyone's selling, right? This is what that means. Everyone is selling. Almost no one is buying. That's why these go down. Okay, so when that happens, you need to be on the opposite side of that coin. Okay, so that's RSI on the daily. Let's go look at the stochastic RSI. Let's put this on auto. That was a lot of volatility. So now what do we got? Well, look at our momentum. This is your momentum of the move. And the stochastic RSI is cranked out on momentum. The Ferrari is flying down whatever highway, pedal to the metal right now. We are cranked out. How long do we have to go back down right now? Of course not. Go look at October, right? We spent almost 4 weeks in October way up here, right? So amazing. That's what we want to repeat that. Let's crank out February, pedal to the metal, and we can continue our upwards movement. So now let's go look at a little bit bigger of an indicator, in my opinion. The ADX and DI. What is this? Well, this also tells you kind of the momentum and the power behind the move. So the ADX is the orange line. The DI positive is the green, or the bulls. The DI negative is in the red, the bears. Okay. And what do we have? Well, we just had a bullish cross. Although the ADX is sinking, so it's not as powerful, we want to see this kind of flip around and go back up. As the green comes back up, you want more separation, kind of like we did back in October. And speaking of October, this is the last time we had this cross. Look at this. Bullish cross right there. We haven't had that until yesterday. That's pretty big, right? Going again with the bigger ideas that things that haven't happened in a long time that are happening, you can look back in history and be like, wow, yeah, October was a great month. Wow. Hopefully February is a great month, right? We'll be able to know that in the future. Hindsight's always 20/20, but you got to be kind of prepared and in the moment to notice those things that could be the big picture, turnaround points. So right now, right, we got the cross and the ADX was heading down. We got the cross and the ADX is heading down. All we want to see is this flip around just like this, right? You want it to gain strength as we made that cross. We want to see these lines diverge from each other. We want to see the red continue down. We want to see the green continue up. And we want to see the ADX gain strength and the bulls be very strong. Okay, so now what else we got? How about the MACD? Let's go look at that one. So what do we got here? On the daily chart, we got our cross back January 29th. And we flip green. right? And now what you want to see is your candles getting bigger to the upside, which we're getting. Okay, and then once you have that on the daily, you want to look for confirmation. So you zoom out a little bit. So go look at the 3-day. What do we got here? We just had a cross update today on the 3-day. That's even bigger. We just flipped green on the MACD 3-day. Now, if you want an even big picture, you got that next check mark. Go out to the weekly. Do we have it there yet? Not yet. But what do we have? We have the candles shrinking on the bearish side, right? So if we get a bounce out of the blue here, the MACD, this is your MACD, and the signal line is the orange line. So you want to see that cross, just like we did right here. Now on the weekly, this will be very bigly, okay? On the monthly, we talked about this, last week. How we got that cross here, and everyone thinks it's time to get out. Well, the MACD is a lagging indicator, as all indicators are. And we noted that this doesn't have to last long because we haven't done it in history, right? We flip, everyone kind of focused on this one because it was a monthly MACD cross back in the bear market. But I mean, look how bearish we got here. Look at this red candle. This was almost, right? The momentum of this MACD was what, 659? You see that on the right there? It's almost equal to the bottom of the MACD on the 2018 bear market. That's what you need to be comparing. And not only that, but look at the size of these bull candles, or this bullish momentum, right? You can think of this as like the strength of it. And then we had just a little, like, bee sting maybe. A mosquito bite here, bee sting there. We're okay. We can come out of it. Look at the cross on the monthly back in December 2019. Briefly cross down, cross back up, cross back down, cross back up, right? It doesn't mean that you have to go full bearish for months at a time. Could it mean that? Sure. Are we definitely out of the bearish downside? Of course not. But these are things that you need to be noticing and not be on one side of the court or another for the bulls and the bears. You need to look at both sides always. And this is kind of looking at both of that on all different time scales, okay? So the daily, they're starting to turn around. The smaller picture, you got to obviously start with the smaller picture and then zoom out. And as you're seeing, the daily's looking great. The 3-day's starting to look great. The weekly's potentially starting to shape up. And then hopefully we get a turnaround of the weekly and the monthly. And then, yeah, we're probably going to be heading back to all-time highs sooner than later. And only if those continue back to the upside. Okay, so I do expect a slow movement up. This is a massive explosive move that we've had the past couple days. Pretty much unforeseen by everybody. I don't think anybody saw Bitcoin hitting 11.5% in one day. I don't know anybody that said that, but okay, now we're looking at a different indicator here. Maybe you're not familiar with this, but like I said in the beginning, you want to look at several indicators, all saying similar things, and even indicators that you're not familiar with, have never seen. You'd like to just pick a random indicator and have it agree with your sentiment on your indicators that you are familiar with. And maybe this is that one. So someone in my Patreon recommended I look at this, and so we're looking at this. So if you want to learn more, that's what Patreon is for. We look at and take deep dives on any questions you have at any given time. So if you want help navigating the rest of these markets, follow us in there. We got a great bunch of people in there that stutter just like I do. Let's see. So on the daily chart, what do we got? Well, these are kind of Bollinger Bands, right? And then you have your move outside of these. And let's look at this. Is called the TDI. Okay, so you basically have the median line in the orange, right? You see that, and then the red line is your TDI line, and then your signal line is the green line. So when you get a cross on your signal line to the upside or the downside, it's usually a pretty big move, one way or the other, whichever way you're going, right? And then what you'd want to particularly look for on this is a movement outside of the bands, because that means, if you get a cross there, which we did on the daily, right, that's a good time to be kind of waking up and thinking momentum's going back to the upside. So what do we have? We got outside of the bottom, a cross, and then movement up. And now we're outside of the top even. So when have we done this before? Well, on the daily, unfortunately, you have a little bit too many ups and downs. So I like to use this on the weekly or the 3-day at least. So let's go look on a 3-day. So we got outside near the bottom here on the Bollinger Bands. We got a cross right here, January 31st. And now we're through our median line. So we're actually up in the more bullish movement of momentum. And now, when do we have this last? Well, let's go back and look at back in here in May, right? We got a drop, little too many signals again, right? So let's zoom out more. I would recommend using this one on the weekly. And even on the weekly, we still have a signal cross to the bullish side. So don't confuse this for the ADX and DI and thinking this is bulls and bears. This is, you could probably switch colors, right? You could change the colors, but your green is your signal line here. This is just the default setting. So if you want to look at it, you can just type it in TDI. And we've had a weekly movement outside the bands and a weekly cross. This, historically speaking, has been pretty darn accurate for predicting bigger moves to the upside when it crosses bullish. There's July, right? We got outside of the bands, came back in, bullish cross on the weekly. Remember, this is the weekly now. Okay. October came, or September. Remember the September lows? Right. We got that cross back in here to the downside. We crossed back bullish, right, going into October. How did October do? Great, right? How did July do? Great, right? There's a cross. There's a cross. Previous 2 times we've crossed have been fantastically great for price movement. We just got a cross again, right, at the weekly close yesterday. Wake up. All right, so maybe you've never seen this before. Maybe you have seen this before. Let me know. Let's try to keep it moving here. We're at 16 minutes, so hopefully you're learning something or have learned something. What else do we got? Let's look at, how about our 5-day Gaussian channel? For those of you still with me, maybe you've seen me talk about this before. The 5-day Gaussian channel for Bitcoin can be very useful when you're near a bottom or any of these moving lines, because they'll all act as support and resistance in a minor way or a major way, as we're seeing now. What do we got here? We hit 1, 2, 3 candles interacting with the bottom of the Gaussian channel on a 5-day. Why the 5-day? It's just more, the most concrete. You can go to the weekly. It's a little bit bigger scale. I would certainly rather use this on the weekly than the daily. You can go look at the daily and you even get some information out of that, but you have just so many fake outs on the daily or lower time frames that the 5-day is where the sweet spot is. Okay, not too hot, not too cold. Goldilocks did not get eaten using the 5-day Gaussian channel. Now, what do we have? Well, on the daily, look at this. This could still give you some good information, right? We've been under here for a long time, and we've even turned red, which is bearish. But look what's happening, right? We just broke into the channel. That's not an easy thing to do on any time frame after you've been so bearish. This is another thing starting to turn the tides a little bit, right? The multitude of indicators, several indicators, all saying similar things. Look at this. So May drop, May, June, July. Look at the break into the Gaussian channel. What happened next, right? We turned pretty bullish. November, December, January. We pretty bearish. We've broken now into the daily Gaussian channel. All right. Now let's go to their 5-day and remind you again. At the bottom of a Gaussian channel is historically always a great time to add to your positions. Every single time. It doesn't matter if it goes down. It doesn't matter if it's the bottom. It's likely not the bottom at the exact bottom of the 5-day Gaussian channel, right? Sometimes we've come out of it. If your average buy for Bitcoin was $6,000, are you upset today? No. Years later, months later sometimes, you don't really care, right? Buying at the bottom or even any time, right? If you bought it right here at the wick, that's 5,900. Was it the absolute bottom? No. Would you really care 2 years later? No. Okay, this is going to be the same thing. We talked about this last week even. We were one of these candles, right? I said, we're at the bottom. Is it the bottom? Likely not. Are you going to care years from now? Likely not. Buying at the bottom of the 5-day Gaussian channel on any coin, certainly Bitcoin, has worked out well for you every single time. Years later, right? Not always the short term, but long term, it's the right way. Okay, now let's go look at a couple on the weekly. We'll just keep this, really long. So another big thing that we need to be looking for is the stochastic RSI on the weekly chart. Look at this. We're almost getting a breakout here back to the inside. And the inventors and the founders of the stochastic RSI say this is what you want to wait for. A movement into the shaded area. That's why it's shaded. You need to see this inside here. So unfortunately, we're probably going to have to wait another 5-6 days till we get the weekly close. But if you see this looking like this at weekly close, very bigly. Okay, so that's what we want to be watching for. Let's go back to the daily, and I want to mention one more thing that's really big. So the 50-day, that 50-day moving average, let's put that back up and see where we are. 50-day. This has not happened. We haven't even visited the 50-day and since November, right? And last time we broke above it and held it as support was very bigly, right? This is what we're looking at right now. This would be much more, give me a lot more confidence, right? If we could start holding this line of support, that we're getting ready for a bigger turnaround. And yes, I would think the bottom is in if, this is a big if, we can hold this for, a multitude of days here, right? We don't want to, come up here and then have a move back down. We want to close above the 50-day, pull away from it, and then keep our indicators looking good. We'll keep a tight watch on our indicators, and hopefully we're getting ready to move back out to the upside in a big way. The next real big level for me to be watching for resistance is going to be our previous multi-month or multi-week support here, right around this kind of 46K level. That's the next clear-cut place I'll be watching. If we can somehow get above that, I think all bets are off at that point. If we can close above 46K and sustainable above that, I mean, we're turning pretty bullish here in a hurry. So we'll keep an eye on that in the kind of probably several days to weeks still down the line. I don't anticipate us just blasting through this again, but Bitcoin can do whatever the hell it wants. Obviously, you're seeing that now. The next little minor resistance, putting in the higher high here, getting above here, this candle right here, that would be a pretty big move. If we can close higher than this close, right, 43,920, that'd be a pretty big step. And then the next is take out that previous support that lasted from December all the way to January, over a month of support right at that 46K level. So that's what we're looking at. Remember, join our Telegram. It's free if you want more help, coverage, and looking at more indicators. A lot more videos in there, more advice, stuff like that. That's what Patreon's for. Check us out there. Let's get to make this video even longer. The crypto fear and greed index, we're at 45 now. So we haven't seen 45 in quite some time. We had it briefly right there, December 22nd. We're now right at 45 again. So hopefully we can break out of this. That would be another thing to add to your, conjunction of I'm just making shit up now. You want all your indicators saying similar things, right? And this is just another tool in that toolkit. So let's look at the big picture here. The year, right? We came from way extreme greed, and now we came all the way down. We spent a long time down here. We actually spent longer now in fear, or we're still in fear, right? So we spent longer in fear here than we did in the May drop, in the summer, May, June, July, if you can believe that. So we've been here long enough. Time to get to the upside. All right, now maybe you've seen this, right? This is the psychology of markets. It'll be here till the end of time when there is no more markets. Okay, so let me move my picture and we'll see where we are. So I put this out on Twitter and asked people, where we are, and I got all of these answers. So obviously only some people are right? And some people are way wrong. I even had some people say complacency. Where you been, bro? We're not in complacency. If you've been in fear and extreme fear, and we have a 50% drop in the best performing asset of all time, we're not in complacency. In my opinion, right? Maybe I shouldn't give my opinion, but in my opinion, we could potentially be in this stage right here. But I if I had to gun to my head, Jesus, tell me where we are. I'd say we're right in here. If I had to give my honest opinion, gun to my head. I think we're, maybe slowly coming out of depression. There's a lot of bearish sentiment, and when everybody thinks you're going down lower, everyone thinks, this isn't going to last. We're going back down. And I, 2 days ago, let's say Friday or Saturday, I dare you to find any tweets that said we're getting ready to pump. Nobody, right? Everyone, when every YouTube video was making how low can we go over the past week, right? 20K, 14K, whatever K, shut up. But in my opinion, being in extreme fear for the longest we've ever been in, ever, like ever, that leads to this area, right? And then I don't know where we are, but putting in, higher highs, getting above that, I would say we're right in this area. So if you like that, cool. If you don't like that, cool. But you got to try to, you could say wherever you want if you have enough evidence to back it up. And it's being extreme fear, the longest we've ever been in, would kind of back this general area up. So I would say, previous highs, right, that we just looked at. You can look at extreme, very similar to this. Look at this. The denial right here, we need to cool off, and you can look at price action, and then coming down to these capitulations, depression kind of probably started hitting right back in here, right? The early depression, and then, yeah, you just kind of give up, and then, oh, yeah, right, this is a fake rally. It's coming back, right? You can kind of see it overlaid there, right? So that's just my 2 cents. You can agree or disagree or hate me, whatever. Okay, let me get my picture out of here. I'm going to do quote of the day. Tools. There we go. All right, looking better. Expect problems and eat them for breakfast. There you go. So everything's in your head. Just always expect, like I said, the markets are always trying to trick you. You got to have your plan and stick to your plan. Car of the day. One of the coolest new McLarens, McLaren 600 LT. LT stands for long tail. Now you know. There's a lot of carbon on this one. There's a lot of carbon. The arrow, and then one of my favorite parts of this car is the exhaust. That's the exhaust out of the top. It shoots. You can shoot flames out of there. You can roast marshmallows. It's pretty cool. There's actually videos on YouTube of guys doing that. I don't know how they taste. Maybe a little propane-y. Little gas, but pretty cool. Pretty cool looking. I like it. And speaking of this, why blue? Well, there you go. Look familiar? There's the exhaust on the top. I can't get it. I mean, this is the exact same one, isn't it? I have you can take the back out here. So I took you can do it on the real one too. But the same brakes and everything. Identical. This is one of the highly scaled, detailed ones that it's even got carpet inside and like the carbon. I mean, it's like ultra realistic. So, I just love cars. If you couldn't tell. All right, I think that's it. I'll see you on the next one. There's your meme of the day. Thanks for sticking here this long if you have. High five to both of you that are still here. All right, 28 minutes. Jeez. Big update.